much, Seema Modi. Now, as automakers and dealers get ready to kick off their 3 biggest months for sales, concerns about the business plateauing due to high prices and rising interest rates have given way to a new reality that sales just keep rising anyway, which checks out on the stock side. The S&P auto subsector up nearly 40% for the year. Let's bring in Phil Lebeau to discuss, Phil, and how much of that S&P auto performance is the parts dealers like O'Reilly and AutoZone, and how much is the manufacturers?
It's less the manufacturers. Take a look at shares of Ford, GM, Stellantis is a little bit better, Toyota. I mean, those guys really haven't been doing much over the last year. Certainly Ford and GM haven't. And what you're looking at here is, the aftermarket parts retailers like the AutoZones, O'Reilly, as well as some supplier stocks, those that are focused on the next generation of vehicles. All of those are part of that higher move for the S&P auto index. But the thing that people are going to be focused on, Kelly, is you and I and our neighbors, if we're interested in buying a car this summer, yes, you are going to find slightly better deals in terms of incentives and slightly lower prices, but you're still seeing a very strong market in terms of demand. In fact, LMC Automotive out this morning revising upwards its expectation that we will see auto sales top 15 million this year. That would be the strongest since 2019. That is not what people were expecting just a couple of months ago.
We talk about incentives. This is something that the auto dealers and manufacturers have not had to do for several years. How big, how widespread will these incentives be, and on what kinds of vehicles?
Well, obviously, the older, less desirable vehicles get the biggest incentives. That's always been the case. And right now, the average is about $1,700. Now, you might sit and say to yourself, wow, that's a lot compared to a year ago when it was only $1,100. But you have to take the percentage of the average price paid, Tyler. This tells the story. It's going to be about 3.6% of the average price paid, which is just over $47,000. You know what it was pre-pandemic? About 10%. So the automakers, while they have raised the incentive, they're nowhere close to where they were pre-pandemic. So they've got some money to still spend and still put on the hood in terms of enticing people to come in and to buy a new vehicle.
So how many cars, trucks are still selling at above MSRP, above sticker?
The percentage is hard to know for sure. Overall, the average is that it's slightly below the MSRP right now.
Okay.
But look, if you look at certain pickup trucks, Tyler, the popular ones, you're going to pay above sticker. That's just the way it is because there is that much demand that is there. Now, we are seeing greater production and greater inventory, but there's a lot more demand out there than I think people appreciated.
That said, Phil, are we in a situation where we're seeing inventories finally grow, prices start to come down or rationalize? On the EV side, I don't know about for everybody else, but used car prices are falling. So even though we're finally seeing sales pick up back towards more historical normal levels, like you said, is it not quite the sort of cash cow that manufacturers might be hoping for?
It depends on the type of vehicle that you're talking about, Kelly. And I know that seems sort of like a cryptic answer. And in terms of the used vehicle prices coming down while we still see strong demand for new vehicles, that's because the automakers can do a lot more in terms of incentives and can say to people, you want to go out and you want to get yourself a used auto loan at this particular interest rate? How about if you buy a new one? And we've got captive financing arms that maybe the interest rate won't be a ton lower, but they can put their thumb on the scale, so to speak, so that it looks a little more enticing to buy a new model versus a used model. And that's why we see a little bit of that depression on the used prices relative to what we're seeing with new vehicles.
Let's talk quickly about EV pricing. We know Tesla has been cutting prices this year. How much pressure has that put on other EV manufacturers? Are they following suit?
It depends on which model you're talking about. Look at the Mustang Mach-E. Ford had to cut those prices. Why? Because it goes right up against the Model Y. And so it's a direct competitor. And it's easy for people to say, well, I'll go out and buy a Model Y instead of a Mach-E. On the flip side, Ford doesn't have any competition right now in the full-size pickup truck when it comes to electric versions. So it's raised prices on the Lightning. When we talk to the Rivian CEO, RJ Scaringe, he's raised prices. They've seen higher prices paid for their R1T because the demand is out there. You really need to see the entire market stretch out a little bit before you start to see some changes. And one other thing, because of the way the IRA Act is written, some of the foreign models, electric models, it's not applicable if you buy an EV. But it is applicable if you lease an EV. So that's what you're starting to see those companies do.
So the Audis, the BMWs, the Mercedes, those EVs,
correct,
you might be able to lease and get some
you'll
of the
see a lot
benefits.
more EV leasing. That's going to be a lot more popular over the next year or so.
Very interesting. Phil Lebeau, thank you, sir.